Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 16th of October, 2021. And this is the weekly technical analysis for spot gold and dollar yen for the third week of October. Let's begin with spot gold. And the second half of the week, it has climbed up to test the daily 200 EMA and even spike through on Thursday just to hit the 1800 key round figure resistance level. And then on Friday, gave it all back and retraced it, and looks like it seems to have formed a evening star pattern here. We'll see whether that's going to follow through with some further bearish momentum. Key support is going to be at the 1750 area, and anything further than that, there's also the another round figure at the 1725. Which will bring it back to where it all started from at the end of the previous month, end of September. But let's see how it progresses. And for now, this resistance where it broke through at the 55th area, and the daily 55 EMA seems to be still valid for now. And the 62-fib retracement, it's aligns with the weekly pivot for last week. That's going to be interim support. We'll see how long that will hold. Okay. Let's also move 1750 as a key support here. And the major support is back at this swing low at 1774 area. So 1800 is still valid as a strong resistance zone. Okay, so what happened on the Wednesday with this strong push up by spot gold? That was due to the slightly better than expected CPI, US CPI data, but then after initial dip lower by spot gold and other major pairs, dollar retreated and fell lower, and this gave the opportunity for the major pairs to recover, and you'll see on the 4-hour time frame where that was the initial dip lower. Once the news came up, that managed to find support at the 4-hour 55 and made a strong bounce through all the way higher, and then on Thursday hit the 1800 figure. But Friday, we gave it all back to where it started from at the 1767 and back below the monthly pivot. So that's That's the volatility of the Forex world. Let's also take a quick look on the 1 hour time frame, where that was the initial dip lower after the news, and that's the support at that 4 hour 55, which is the same as the close to the 1 hour 200 EMA with that multiple of 4, and that's the strong V-shaped recovery back up. And this is what I will share in my trading blog tomorrow as well. Took the opportunity to make some trades here. And then on Friday, yep, strong retracement, give it all back again. Okay, which is fairly typical for Forex pairs, especially after hitting a strong resistance area. So next week, we'll see whether there's going to be a continuation with this bearish sentiment, short-term bearish sentiment. Let's take a quick look at the weekly time frame. There was the rejection up here and closed back lower below the just below the monthly pivot. There could be an attempt to try to climb up and likely consolidate. Actually, the US dollar is also going to consolidate. It could consolidate and possibly just test the 1750. So that's going to be interim support here. So it may not make a move lower below 1750 yet next week, probably the following week, where the FOMC is set to announce their tapering and see what other policy decisions there are. But definitely strong resistance at the 1800, where it has not managed to climb higher there. So for this week, there's only the Philly Fed manufacturing index on Thursday, and then flash manufacturing services PMIs across all the major economies. No major news then for the US dollar, so slightly going to consolidate and based on technical moves. So 1750 for next week, watch out for support there. It could try for the could test the 786 retracement as well. But it could be too early for it to move lower and test 1725, but we'll never know. Okay, let's also take a quick look at the US dollar index, and what happened is it's inversely correlated, and that's the push up into resistance on, and Wednesday, that's where it fell and continued lower on Thursday into to test the swing high again, this 100 pip area, and then just close below the 9400. So that's the interim resistance for now. So US dollar index could also consolidate for next week within this range. Support from the 9370 area to the 9450. And just to check where this resistance came from, let's just take a quick look on the weekly time frame, and that was the swing low from early part of the year where it bounced from. So that was a critical resistance now. And yes, climb up to test that. Almost did at the end of a couple of weeks ago. But this time it has hit it and rejected. Okay, let's move back to the US dollar against Japanese yen, where the Japanese yen has really weakened. And following last week's strong bullish move and breakout, it resumed last week and broke through 113 and also 114 to hit a high of 114.46, so almost reaching 114.50, and climb back into the previous bullish channel from middle of the year. So a very strong bullish move. Go through this resistance at the 162, which aligned with the 200 pip. This fib. So now resistance is going to be at the 114.50 area. We'll see whether it can push up higher. We can remove this fib for now. It's a short-term fib. Support. There is support. Let's change this fib to a wider range to this reversal fib. And it has almost reached the 200 fib extension of this reversal move. And that's where the potential resistance is going to be 114.60. And looks like there is definitely clear support still here at the 112. That was this swing high. So this is still valid. Let's remove this one here, and yeah, 113 here could be an interim support. Let's move this. See if I can move this. So this swing high now is up here. Oops. We can do that, or even take a smaller fib up here, but that's okay. We can still use this reversal fib. So we'll see whether there's a further bullish momentum next week. Let's look at this strong bullish candle after the previous week's breakthrough. So there's definitely some pullback in store, but it could just continue to spike through and perhaps even reach the 115. So we'll see how much it can push through, but the likelihood is a pullback first. There's a lot of opportunities for it to bounce off from every time there's a pullback. So 113 could be a strong intermediate support. All right, so let's see whether there's it's going to take a break, consolidate for next week, and prepare for the week after with the FOMC meeting and decisions. That will be first week of November, and that's going to be a critical week for the US dollar as well. Okay, so do check out my other videos on the other major pairs. Have a safe week and a good trading week, and cheers for now.